Hey folks, good morning and welcome to Swing Trading Today. This is Bob Desmond and it's a certain little fella's birthday. How old am I? Let's just say that Pikes Peak was a pimple when I was born. Alright, so I'm looking forward to another blessed year on this earth, doing what I love to do. I'm going to do this video, head to the gym, and just enjoy the day. Before we get into the pre-market activity and then members stock chart requests, that's where we review the symbols that our gold members submit for me to review. I don't have many today. It's very quiet this week, so it'll be very brief. Before I get into the charts, I want to remind everybody we have the 4th of July special going on. It is 40% off of the silver level price and 50% off of the gold level price that ends on July the 5th. A huge savings. Why am I doing this sale, which I rarely do? The reason is that we're revamping the website. If you're willing to lock in at these discounted rates, you'll take advantage of the new website. When it's launched, it's going to be phenomenal. It's going to have a phenomenal back end. When I send out alerts, you're going to have the option of receiving not just emails, but push notifications and text messages. So lock in those prices now, because the money I've invested or investing in the new website is going to require that I raise prices. So new members are going to have to pay higher prices than what are posted on the website now, and especially higher than the discounted rate right now. So it's a real good value. So take advantage of it. And that ends on the 5th. Not many spots left, especially the gold level membership. And these are all yearly prices, not monthly, but the yearly levels, okay? So take advantage. Let's get to the charts that we are watching this morning. Let's begin with the pre-market activity of the dollar in particular. Now, the dollar gave a head fake yesterday, excuse me. It rallied. I was fairly bearish on the dollar over the weekend. I didn't react to it. It's a holiday abbreviated week. I don't do much, although I did put on 2 trades yesterday that came to us, right? 2 trades came to us. We executed on those trades. They're still open. I'm looking to add to those positions. But in the case of the dollar, they spiked it. It then faded into the close, okay? Which is exactly what you expect to see. This morning, you're seeing a continuation breakdown on the dollar. It broke down below this lower band of support. So we have a double top, and what I'm looking for here is to see whether or not we take out the lows of the 29th. That was last Friday. If we do, dollar's going lower. Now, what should do well? It should be gold. And you know what? I have to correct myself. There was a gentleman that asked me whether or not I saw a bearish divergence on the US dollar, and I told him no. For whatever reason, I must have been looking at the wrong chart, because I was going over the dollar chart over the weekend, and I always look for divergences, and I said, sure enough, yeah, there's the divergence, because you had a bullish divergence on the price of gold, and I said I didn't see one on the dollar, but there is actually one. It began back here on May the 29th, and you can see we've been putting in lower highs while the dollar price has been putting in higher highs. All right, so that's what we use the RSI for. It's not just about overbought, oversold conditions. It's about bullish and bearish divergences. It's an early warning signal that all is not well with a price move. In this case, the US dollar. All right, I digress. I wanted to correct the record with regard to RSI daily chart on the dollar. Yes, there is a divergence. I don't know what chart I was looking at. Record corrected. We move on. Let's go to gold. Let's see how it is trading this morning. We know that it trades inversely. We use 4-hour charts here. It trades inversely of the US dollar, and we are up strong this morning, up $5.60. Now, we have a long position in the gold mining names, and we're looking to add to that position. And for members, I'm going to be revising our strategy of when we plan on adding to that position. So stay tuned, members. Let's go to Bitcoin for a second, because Bitcoin is looking really, really good. It popped up yesterday. I was watching it last week. I was looking for a breakout. I didn't expect this gap up, but we got it. We'll probably get a pullback and a retest of this support level here. We're up. Actually, now we're down $10 on the day. We were up $10 earlier, only a few minutes ago, and now we're down. But the big picture here is not a 4-hour chart, folks. We don't trade simply off of 4-hour charts. We use multi-period charts, right? We want your 5,000-foot view, which is your intraday chart. Then we want to take a look at the daily chart, which is your 10,000-foot view. Then the weekly chart, your 20,000-foot view, and the monthly chart, which is your 30,000-foot view, okay? We want higher level pictures. So when we take that strategy and we apply it, take a look at your weekly chart. Here is I drew this weeks ago. These orange lines. This was your downtrend channel. Guess what? That ended this week. We broke out. The week isn't over yet, but it looks as though Bitcoin is breaking out, and I may for the first time be buying some. I think that Wall Street is warming up to Bitcoin. I think they wanted to knock it down so that they could get involved. It got ahead of them. Now it's pulled back some. I think that these guys are going to be stepping in and buying a position. So I'm going to buy some on spec. I like Bitcoin breaking out here. Plus, it just added more market share. So more to come on Bitcoin. Let's go back to a 4-hour chart and talk about the S&P futures this morning. They are spiking this morning. I will warn everyone, okay? Holiday abbreviated week, light volume. Yesterday, a very strong day for all the major averages, but light volume with the exception of the Russell 2000, which had good volume on the IWM anyway. So in regard to the large caps, horrible volume yesterday. And I suspect that volume will drop off again today. So will I go chasing the market higher on light volume? No, that's not going to happen. So what we want to do is watch for a breakout above this resistance level here. And actually we already have it, but we don't have a breakout above the pivot point. So we're trading now above this declining upper band of resistance. Now we want to see, do we get above this pivot point here at 2745.5, last seen on the 29th, which is last Friday. We have RSI going in the right direction. No divergence there. So we're looking good. 4-hour chart. Let's go to the Dow. All right, very similar price action here, where we are putting in higher lows. And we're looking for a breakout above this upper band of resistance. And we're there. Okay, so we have the breakout. We haven't closed there yet, which is still a 4-hour chart. It just opened up at 5 o'clock this morning. We'll check in at around 9 o'clock when the new bar opens up. We'll see whether or not we have a close above this upper band of resistance. If we pull back and close back down below it, we're probably going to have seen the highs of the day when you include the pre-market activity, okay? Beware of the volume, folks. Light volume, holiday abbreviated trade. What does that mean? It means that all the thugs on Wall Street, all the banksters, they went on their private jets. They're out at Southampton Airport, clogging up the roads out there. I live out here. Believe me, they're out there having a grand old time. Who's in charge of the store? Computers, okay? All they're doing is keeping the market in check. Okay. What else will we talk about? Let's check out nat gas. It's been weak. It was strong. Here's your double top on nat gas. on a 4-hour chart anyway. Lower highs and now lower lows. And it appears as though we are weakening up here. This is a dead cat bounce. This is doomed to fail. All right, so lower highs, lower lows. This is a continuation breakdown pattern, not a breakout pattern, but a breakdown pattern. Basically, the shares got oversold, and we saw some buyers move in. Not a lot of big volume to the upside anyway. We saw volume to the downside, so it looks like we're going to get a resumption of the selling on nat gas. So I would not be a buyer. Remember, Thursdays, I think it's 10:30 a.m. Eastern Standard Time, we get nat gas inventories. Let's take a look at the Dow Transports. They're breaking out this morning above the upper band of resistance on a 4-hour chart at the highs of the session. Here's your pivot point. We're watching for a breakout on the Dow Transports. Now, all breakouts are not created equal. I said this last night when I did my post-trade review of Netflix. I'm repeating myself, but it bears repeating, especially for new traders, right? All breakouts are not created equal. If we continue higher today, yet volume continues to decline, I will not trade this market. I will be looking to book profits into that breakout. Now, if volume rises and rises to above average, or at least at average, then I'll look to open up a position because that's a healthy breakout. So just be careful of the volume. Keep one eye on the volume. Volume matters, folks. So the transports are looking good here this morning. Let's get to a chart that I think everybody should be aware of. It's nothing to trade off of yet, but it being July, we want to talk about the yield curve. Let's take a look. Okay, folks, this noisy chart that you're looking at is a monthly chart of the yield curve. What is the yield curve for new traders? The yield curve is the measure of the spread between the 2-year Treasury yield and the 10-year Treasury yield. When they narrow, it's an indicator that you have traders that are less willing to invest in bonds long term. They want to stay short term. So the spread narrows between the two. So what you're seeing now on a monthly basis is the fact that we put in yesterday, being July the 1st, a new monthly low, and the lowest low are we into 2016 yet? So are we into 2006 yet? Nope, we're still in 2007. Since August of 2007, we haven't been this low on the yield curve. Now, what does the yield curve signify? The yield curve is a measure that we watch because it's indicated the last 5 or 6, 7 recessions. I have a few of them outlined here in blue annotation, these boxes. Now, it's really nothing to trade off of, just something to keep in the back of your mind when you're trading, when you're deciding on how big you want to get to the long side in this market. And when it becomes really important to watch the yield curve is when it inverts, meaning when the 2-year Treasury bond pays more than the 10-year Treasury bond. So keep an eye on it, nothing to trade off of right now, but an indicator that all is not well. Despite what you hear in the financial news media, all is not well. The bond market is telling you that, okay? Please, let's pay attention to the bond market and the stock market and the indicators that they're sending us, and we trade with what the market is telling us, not with what the talking heads on CNBC want us to take a look at, right? So let's move on. Let's go to members stock chart request. The first chart up is for fellow member Anthony. HUYA. HUYA, the symbol. We have a nice chart here. It's got relatively little history, but we did put in a high of $50.82. It looks like we went public back in May with a 14 handle, and we went all the way up to $50.82. I wanted to do more research here, but we have pulled back off the highs. We did break out on the 29th, which was Friday. We're pulling back now, and this arrow signifies a retest. What does that mean? It means that we broke out. Traders being OCD, they like to pull back and see a retest of whether or not what was resistance would now act as support. Very critical. And we did get that pullback and a retest, which is good stuff. Weekly chart. There's not much data here, so I like to pull back and a retest. I think the shares can be bought with a stop right below the lows of the 29th. Now, where I would be a more aggressive buyer is a breakout above this upper band of resistance, because remember, we like to use multi-period charts. The higher the multi-period view, meaning the weekly chart has more value. The significance of a breakout on a weekly chart far outpaces, about 5 times as much, the breakout on a daily chart. So when you get that breakout on a weekly basis, it's a validation of the breakout on a daily chart as well. And when you get it on volume, very, very important stuff. Now, it's only Tuesday. The markets aren't open yet, so we only have one trading day in the books. It's a holiday abbreviated week. I would be careful of opening up a large position this week, so please, just be careful. Let's take a look at, I only have one other one to go over this morning. Actually, 2. OFC, which is Oriental Financial Group. I went over this one way back here. And man, what a rip. A really nice move. So are we moving higher here? Yeah, let's update the chart. Take our crayon out. Throw up some chart art, because it's the chart art that helps us add visuals to what our mind is thinking. And we also save these for future reference, so it allows us, a case in point back here, I could tell that I was looking at in a split second, right? You don't have time to keep re-annotating charts, especially stuff that's already happened. So the view back here, I knew in one split second I was looking at a bull flag setup. It was a bullish setup, a continuation breakout pattern, and sure enough, that's what we got. And here's where we find ourselves today. Now what we're looking for, or looking at, is a breakout on a daily chart out of this wedge formation, a very nice formation. It could have been argued that it was a head and shoulders setup, left shoulder, head, right shoulder. Here's your neckline last Friday, especially when we had that bearish reversal day last Friday and the financials were not looking good. So that argument could have been made, and the reason why you wouldn't want to execute a trade simply because of what might be, you want to open up your short position of a stock when you break the neckline, right? Not in anticipation of it. Because if you did, you would have gotten burned yesterday. So we broke out yesterday. We may get a pullback and a retest here. I think that these shares are a buy. I like OFG, but if we break back down below 14.25, that puts us back down to this trading range. We stop out. We have a double bottom setup on Stokes, and they're rising. Same deal here on RSI, and RSI is above 50. Very critical. We don't have that on Stokes. We do have it on RSI. How is volume? Volume yesterday on a holiday abbreviated Monday was strong. Good stuff. I like the chart. All right, the last chart up is going to be Bannerman Resources Limited. It's an Australian stock, and it's a penny stock as well. I'm not a big penny stock trader, but it's a request, so I'll definitely review it. So let's talk about the weekly chart, because we want to, again, go for that higher level view, get a feel for where the stock has been to get an idea of where it might be going, right? So you can see that we peaked out at around 10 cents per share back in February of 2017. We pulled back. We have since put in a higher low since the lows of July, which was last year. Good stuff. Now what we're looking for is a breakout above this pivot point at 6.5 cents per share, last seen back in December of 17. We're very, very close. So I would be a buyer on a close above that level on a weekly basis. Let's take a look at a daily chart. First, let's take a look at a weekly chart, candlesticks. It's like refreshing to the eyes. Okay. So yeah, we're flirting with the prior highs. Take note of these wicks, both on top of these candlesticks and on the bottom. So what we could signify from these wicks are that we have sellers above, buyers back here who sat through this sell-off. They just want their money back, right? They just want their money back. They're not looking to make a penny, right? They just want their money back. So we also need to point out that we have bottoming action here at 5 cents per share. We saw it here on the 11th. We saw it again here on the 18th. That's good stuff. So we have support below. So if you buy these shares, you want to use a stop right below 5 cents per share, because if that support level breaks, we're going a lot lower. We'll probably retest the lows of the year. Now, if we break out above this upper band of resistance here at 6.5 cents, we'll probably trade fairly quickly up to 7, then up to probably a high of 9 cents per share, and then we'll be flirting with the all-time highs. And that is it for this morning, folks. If you have any questions, leave a comment below. If you watch this on YouTube, remember, the July 4th special is ending on July the 5th. It is 40% off of the silver membership, 50% off of the gold membership. Click that link above to get taken to the checkout page. I'll put another link down in the section where there is a video description area on YouTube. I'll also add it to the blog post if you're watching it there. Remember to subscribe to my channel, leave a comment, share these videos if you would, spread the word if you like the content that I'm producing. I'd appreciate that. Everybody enjoy your July 4th holiday and have a really safe and have a great time. You earned it, and be well.